Hello. All right, what's going on, everybody? Welcome back to the Achievement Apex. Today, I'm going to be going over some of the most common terms that you'll hear in my videos. I'm going to do this as a series of videos because if it was just one video, it'd be too long and quite frankly, it'd be very boring. So today, I'm just going to be going over the terms you need to know when you're assessing the performance of a strategy. This list I'm giving you doesn't cover every single one, but it does cover the ones that I think are the most important. And to be honest, these are the only ones I track because I don't think the others are really that important. The first one is total profit, and your total profit is the amount of money you make over a period of time. So if you set the period of time to 1 year, what's the total amount of money you made in that year, regardless of any losses? So you don't count your losses, you only count the profit over that time. That's your total profit. And on the other side, we have term number 2, which is total losses. And just like total profits, you pick a time frame, and this time you measure the total losses over that period of time, regardless of any wins. So if you pick 1 year as your period, you take every single losing trade you had over that year, you don't count any of the wins, and that's your total loss. And then thirdly, you have net profit, which is basically you get your total profit and your total loss, you mush them together, and that's what you get. And it's basically just a formula. Total win minus total losses equals net profit. Term number 4 that you need to know is win percentage, also expressed as win rate or accuracy. And that's basically just a measure of the amount of times you're expected to be right out of 100. So if your win percentage is 65%, if you make 100 trades, 65% of those trades are going to be a winner of some sort. Even if it's just a 1 cent win, it still counts as a winner. And that's actually why you can't just look at win percentage to determine how good a strategy is. I actually hate it when I see other channels, they say, oh, look at this strategy with a 90% win rate, and it gets tons of views. But it's stupid because when you look at that, what if the average win of that strategy was 10 cents and the average loss was $10? So you win 9 times, you make 90 cents, and then you lose once and you lose $10. You're going to lose all your money in no time, but you think your strategy is good because it wins 90% of the time. So don't just look at win rate, okay? It is important, and a higher win rate can be better, but it's not the end-all be-all, okay? Okay, the 5th term is your biggest win. So again, you take a period of time, and whatever your best trade was in that period of time, the one that made the most money is your biggest winner. And then on the other side, you have your biggest loss, which is exactly the same. You take a period of time, and whatever the biggest single losing trade was in that time, that's your biggest loss. Your biggest win and your biggest loss aren't that important, but it gives you a small indication about the potential you have for upside and downside. I'd say biggest loss is more important than biggest win, but it's not that hard to track. It's just one trade, so you might as well include it anyway. Okay, term number 8 is your average win. Your average win is calculated by taking your total profit that we mentioned earlier and then dividing that by the total number of winning trades that you had. So if you made 1,000 trades, you won 650 of those trades, you take your total profit, divide it by 650, and that equals your average profit or your average win. And then again, on the flip side, we have average loss, and that's calculated basically the same way. You take your total loss that we mentioned earlier and divide that by the total number of losing trades you have, and that gives you your average loss per trade. Term number 10 that you need to know is your drawdown. And a drawdown refers to the total amount of money that you lost from the peak of your account. So if you started with $1,000 and you got up to $2,000, which we'll call the peak, and then you dropped to $1,500, your drawdown during that period would have been $500 or 25% because the peak was $2,000, the loss was $500. Drawdowns are useful to track because they are basically a measure of downside volatility. And what that means is if you have a strategy that makes like 100% profit, but the maximum drawdown is 90%, that kind of downside volatility is huge. That means that you're putting 90% of all your money up for risk, which is probably too much. So your drawdown is one of the most important things you want to track when you're measuring your performance. And then lastly, you have expectancy. So expectancy basically means how much money can I expect to get back if I put $1 into the market. So if my expectancy is 1.4, then if I put $1 in, I'm expected to get 1.4 back. Or if I put $100 in, I'm expected to get 140 back. And that concludes my list of the terms you need to know when tracking the performance of a strategy. I hope this video was simple, straightforward, and to the point. And if you learned something new or found it insightful, please go ahead and click the like button. If you hated the video, click the dislike button. If you want to support the channel, click the subscribe button. It's free. And if you want to go a step further, you can follow me on Instagram at The Achievement Apex. You can follow me on Facebook, also at The Achievement Apex. And if you want to have a deeper look at what I do professionally, you can visit my website, theachievementapex.com. And other than that, I will see you in the next video. Bye-bye.